Hi students, the mock exam already I have discussed 30 students. Now let's see questions 31 to 40. What does the statement sales is the principal budget factor mean? Companies' activities are limited by the levels of sales it can achieve. Limiting factor, right? Budget principal budget factor is somewhat similar to limiting factor. Option D explains it correctly. Option D. Question number 32. In a situation where there are no production resource limitations, what they mean by that is production is not limited, which means what is limited? Sales is limited. Sales is a limiting factor. Which of the following items of information must be available for the production budget to be completed? You know, before the production budget, you must have finished your sales budget and you must have finished your finished goods inventory budget. I told you this, right? You remember? So sales volume from the sales budget required. Material you don't need for production budget. Budgeted change in finished goods inventory, yes. Labor also is not required. So only 1 and 3. 1 and 3, option C. Option C is right. Option C. 33. PQ company plans to sell 24,000 units of product R next year. Opening inventory of R is expected to be 2,000 units and it plans to increase the inventory by 25% by the end of the year. How many units of R should be produced? Okay, simple. Sales 24,000. Closing stock has to be opening stock plus 25% higher. 25% higher. That means 2,500. Whereas opening stock is 2,000. Production is, you remember the production budget format: sales plus closing stock minus opening stock. Sales plus closing stock minus opening stock. 24,500 is the right answer. Option C. Option C. Next, shall we check the answers for these three? 31, 32, 33. 31, 32, 33. BCC. BCC. Correct. Question 34. A local authority is preparing a cash budget for its refuse disposal department. Which of the following item would not be included in the cash budget? Capital cost of new collection vehicle. Come on, that's the cash flow. You have to include it. Depreciation. No, it's not a cash flow. Wages, your cost, all those are cash flow. Depreciation will not be included since it is not a cash flow. Option B. 34. Option B. 35. Sam budgets to make 4,000 units and estimates that the standard material cost per unit to be 6. In fact, 4,800 units are produced at a material cost of 29,760. For the purpose of budgetary control of the expenditure of material cost, figures that should be included in the flex budget for the material cost. Right. They have budgeted for 4,000 units, but actually it's 4,800. So the flex budget also has to be prepared for 4,800 units, isn't it? So 4,800 units at $6 must be the flex budget cost. Fixed budget will be at 4,006, 4,000 into 6. Flex budget has to be at 4,800 into 6. 4,800 into 6. This 28,800. Do we have the option? No, just enter 28,800. 28,800. 28,800 will be at 35. Yes. 36. The quantity of material in the material purchases budget is greater than the quantity of material in the material usage budget. Okay. usage plus closing stock minus opening stock is what you call usage. Let's see, usage plus closing stock minus opening stock is the purchase. If they say purchase is more than usage, purchase is more than usage, what happens? This answer has to be a positive answer. Imagine if purchase is more, the net of these two must be positive, which means look at this. If they say purchase is greater than usage, what that means is closing stock is greater than opening stock. Understand? If these two net positive, then only this statement will be right. Purchase is greater than usage. Check for the answers. Wastage of material occurs in the production process. No, that has nothing. It's about stock. It's about not production or anything. Finished good inventories are budgeted to increase. Finished good inventory has nothing to do with this. Raw material inventories are budgeted to decrease. Raw material inventories are budgeted to increase. What did we have? Closing stock is bigger. This is about raw material stock. So raw material closing stock is increasing means budget. The raw material inventories are budgeted to increase is the right answer. Option D. Option D. 36. Option D. Good question. Good one. Option D. 37. Shall we check 36 and go? 36. Option D. 37. Prime cost. Prime cost means direct cost, or you can say total cost minus indirect cost. See? Total of direct cost. Yeah, option B is there. Prime cost is the total of direct cost, because prime cost is another name for direct costs. Option B. Straightforward theory questions. 38. The private hospital has budgeted annual overhead costs for cleaning 1,250,000. There are 300 beds in the hospital, and these are expected to be used 95% of the year. Hospital uses a composite cost unit of occupied bed per night. What is the overhead absorption rate for cleaning? Okay. Let's look at this. Number of bed nights per year. Number of bed nights per year will be, there are 300 beds. Each will be utilized for 95% only. A year is 365 days. Imagine if this 95 is not there. Okay, let's remove that. What does that mean? 300 beds used for all 365 days. But they say it's not used for all 365 days. It's used only for 95% of days. Right? So multiplying like this, you can find what is the number of bed nights per year. This is the total number of bed nights per year. How much is the revenue they have? Revenue per year is given 1,250,000. Therefore, revenue per bed night is what they asked. 1,250,000 divided by number of bed nights. We get approximately 12.01. They ask it to 2 decimal points. 2 decimal points. So the answer must be 12.02. Why? Check the next number. 12.016, right? So answer must be 12.02. If you have entered 12.01, you wouldn't get the marks. 12.02 is the right answer. If you enter 12.01, you wouldn't get the marks. When they ask you to give the answer in particular number of decimals, make sure you check the next number, next digit, and round it accordingly. give the answer. Question number 39. A sports equipment company uses a predetermined overhead absorption rate based on labor hours. Budgeted overheads this much, actual overhead this much, budgeted labor hours this much. Over absorption is given. Ask me actual labor hours. Simple. Find the OAR first of all. OAR is figure divided by 175,650. OAR. Let me write it. 3161,700. 3161,700 divided by budgeted hours 175,650. 80. Absorbed overhead we can't find because we don't know the actual labor hours. But we can do this. Look at this. Absorbed minus actual is what you call over absorption. Absorbed is, we don't know, let it be absorbed itself. But absorbed we can write like this. OAR into actual activity level. This is what you have to find. OAR into actual activity level, which we don't know. Actual labor hours we don't know. It will be X minus actual overhead 3096,900. 3096,900. Over absorption 28,800. So you have 18x equals, if you add on the other side, look at this, 3096,900 plus 28,800. 3125,700. Now x will be equal to, divide 3125,700 by 18. 173,650. 173,650. Option B. Yeah, option B is the option B. So we take the answers for 39. 39, option B. 40. Overhead absorption rate 4. Compared to marginal costing profit, absorption costing profit would be higher or lower is what they are asking. You remember the reconciliation I gave you, MC profit, and you add, what you add? Increase in finished goods stock multiplied by fixed production overhead absorption rate. That will give you the absorption costing profit. So we don't know marginal costing profit, but we know this figure. Increasing stock 2,400 has become 2,700. So increasing stock is 300 multiplied by fixed production overhead absorption rate is 4. 4 per machine hour. Careful, that's per machine hour. We need per unit. Per unit. Fixed overhead production absorption rate per unit. Per unit. So that will be 300 is the increase in stock. They say absorption rate is 4 per machine hour. Every unit takes 3 machine hours. So it must be 4 into 3. Per unit 4 into 3. 3,600. So compared to marginal costing profit, absorption costing profit would be 3,600 higher. Option B is right. Option B is right. Understand? Imagine if you had 100,000 here, AC profit will be 103,600. If you had 50,000 here, it will be 53,600. So compared to MC profit, AC profit is going to be 3,600 higher. Option B is the right answer. Cool. So this is the answers from 31 to 40. Revise them. Let me know if you have any doubts. In the next video, I'll share you the answers 41 to 50.